Hey everybody, Brian here. It is Wednesday the 4th. Let's look at this market. We did see some selling today, down about a half a percentage point in the S&P 500 as we close in on that advancing 50-day moving average. And it's important to recognize the rate of ascent. Yesterday we had it close the 50-day moving average at 203.76. Today it's at 204.02. So even if we just turn sideways here for the next couple days, it's likely that we'll test that. So just like any correction, they can occur through price or time. And, it's still, I would like to see that we flush down below there and then bounce. And certainly there's nothing to suggest otherwise at this point, as we do have lower highs and lower lows on the with that below that 5-day moving average. So we remain guilty till proven innocent. I am not predicting the 50-day moving average. It just seems like a likely area for the market to come down and test. So just as always, let price dictate your actions. I think that for tomorrow, getting back above 206 would certainly make it a little bit more neutral here in the intermediate term. So keep that in mind. The longer term trend is still higher with a rising 50-day moving average, and that's important to recognize. The NASDAQ is finding support at that prior low, and when I say finding support, I use that as can't say that it is support yet, but it's trying to find support here at this previous level. And so far, it's really not getting much of a bounce at all. It's just kind of staying down at this level. We would need to get it back above still this level just to turn it a little bit more neutral, and back above probably this level would turn it more positive, and most likely a better bounce if it were to get back above and hold above that level. When we look at the daily chart, let's just take a look real quick here at the Fibonacci, and you can see that we are down at the 38.2% retracement of the from the February lows, and basically of the yearly range that we've seen so far, from the low this year in February to the high we'd seen just a couple weeks ago. So it seems like a likely area that we will continue to stabilize and perhaps bounce from. But as always, this is just a level of interest. This is where we anticipate and look for price evidence before we participate in any such reversal that we may think is coming. The Russell 2000 is still above its rising 50-day moving average, of course, and the bigger level of support is likely down in this area near that 50-day moving average. Same thing as the SPY. We've seen this go from the 50-day moving average, that is 3 days ago, to 108.96, 109.16, and then 109.36. So basically rising at the rate of about 30 cents a day. And we've got it in pullback mode below a declining 5-day moving average with lower highs and lower lows. So again, in these markets where we have declining 5-day moving averages, we are guilty till proven innocent. We look for potential levels of support, but that doesn't mean that we hang on stubbornly to any short position until it reaches our target. We have to listen to the message of the market and react accordingly, but not to panic, of course. The semiconductors sold off further here today. And one other thing to recognize about the S&P, let me just go backwards for a moment, is we're close to negative for this market once again year to date. And anyways, back to the semiconductors, we are in here negative year to date, and we're in pullback mode still as we see lower highs and lower lows below that declining 5-day moving average. And here we're right on the 38.2% retracement of the annual range we've seen so far as well. So perhaps we find support in here. It's certainly a level of interest, but it's not a level to buy. Not while we see that the market is making lower lows and lower highs below a declining 5-day moving average. That means downtrend, and the trend remains lower in the semiconductors in the intermediate term, and obviously the biotechs as well. We've got a declining 5-day moving average. The market was trying to stabilize in here yesterday. We are below the volume weighted average price year to date. That's that level. And the on net, people are losing money in the biotechs this year, as it's still in a longer term downtrend on that weekly time frame, and it's going to take a lot to reverse it. Markets correct through time and through price, and currently we have a correction time price wise still. Again, lower highs, lower lows, declining 5-day moving average, guilty till proven innocent. Same is true for Apple. It's trying to find some support in here, but again, we've got lower highs and lower lows below declining 5-day moving average. There's no reason to look at this as a long trade, and people who are doing that are fighting it because they think that there's support in here. But the more time support is tested, the more likely it is to fail. That's not a prediction. That's an observation, and I just don't think it's worth taking the risks here for a turnaround, not while we have a declining 5-day moving average still.